In my opinion, the truest pure form of passive income comes from investing into dividend-paying stocks. Now this is because after you click the buy button on the screen of whatever brokerage you're using, there is literally nothing left for you to do besides wait and receive those sweet, sweet dividends. Now with the way the market has been trading as of recently, there are crazy opportunities and massive yields skyrocketing for investors who are brave enough to weather the storm ahead. And in this video, we're going to go through 3 different stocks that are offering massive yields, which means massive future income for investors. Now stick around, drop a like down below, and subscribe for more future content like this. Now first, let's get a few things straight on when it comes to what I personally look for when picking dividend stocks. Now first and foremost, when it comes to stocks, I look at the overall business model. And if it's a business model that I think is going to be here long term, then that sort of crosses off one box. On top of that, I like to look at the future performance of the share price of the single stock and see how it's performed over a long time horizon. Now this is of course difficult if it's a maybe newer stock or newer company, but for companies that have been around for maybe 10, 15, 20 years or more, you're going to most likely get an idea of how the stock has performed even during different downturns. Next, I always like to look through the company's financials and make sure the company's revenues are growing and or the debt is under control. Then furthermore, I always like to look at the starting dividend yield, as well as things like dividend growth, and see if or if not the company has paid a consistent dividend long term, and if or if not there's ever been a dividend pause, a dividend cut, or anything like that. So that being said, the first stock that I think could be offering a massive opportunity and is offering huge dividends for investors as of right now is ticker symbol PSA or Public Storage. Now Public Storage is of course a self-storage REIT that is currently down around 5.15% year to date. On the max time frame though, the stock has performed very, very well, besides of course a few downturns historically. But all in all, this stock is up 2,623% plus. Public Storage is trading at the low end of the 52-week range, almost at a brand new 52-week low. Now Public Storage is offering a massive starting dividend yield of around 4.55%, and on top of that, they could be offering a massive dividend increase in the next few quarters if their current cadence was to continue. Now, even though the real estate sector is really performing horribly right now, and of course it has a lot to do with interest rates, I do think that some of these REITs, some of the stronger REITs, are going to flourish once interest rates get cut, and we could see this thing absolutely rocket up like no tomorrow. Now, the next dividend growth stock that's been hammered, but could have the potential to make compounding returns in the next few years, and on top of that offering a massive amount of dividends right now, is ticker symbol TGT or Targets. Now Target's been performing horribly year to date, down almost 30%. And this is due to a plethora of reasons. I would have to make an entire video if we went through everything. But due to things like store theft and even some of the stores closing, Target, which was once well over $250 per share, is now trading at $106. Now for me personally, I do own some shares of Target. I sold off most of my shares around the 145 range and took some profits. And although as of right now, I'm not exactly sure if I want to add Target to my portfolio, it's definitely on my radar and should definitely be on your watch list at least. Now because of Target's price getting absolutely demolished, it's offering almost a 4% starting dividend yield with 54 years of dividend growth and a 5-year dividend growth rate at 11.66%. So that being said, Target does have a history of raising their dividends at a pretty fast rate, although the most drastic raises came just in the last few years. Now if Target for some reason trades down well below $100 towards the $60, $70, $80, $90 range, this stock will be a definite buy for me, but let me know what you guys think about Target down below. Now the last single stock that I think could be offering a massive opportunity and that is giving off massive dividends as of right now is ticker symbol O or Realty Income. Now, Realty Income is personally one of my largest holdings throughout all my portfolios right now. I think I currently own around 2,600 shares or so. Realty Income, along with pretty much all the real estate and the REITs, has been absolutely hammered over the last year, down 23.23% year to date. And with the Realty Income basically trading at a brand new fresh 52-week low, Realty Income should definitely at least be on your radar if you are someone that favors nice juicy dividends. Now for a more longer term investor like myself, I think that Realty Income is going to spring up and rocket out of control the minute that the Fed starts to cut rates, because the reality is that REITs are very sensitive to higher interest rate environments because they borrow money to not only expand to more real estate properties, but to still service the debt that they already have. Now, because of all this absolute craziness, Realty Income has a starting forward dividend yield of 6.11%. Yes, over 6% starting yield. I do remember not all that long ago making videos about Realty Income, saying that anything over a 5% starting dividend yield historically seems like a relatively good deal, especially because Realty Income does and has raise their dividend on a quarterly basis for quite some time now. And although Realty Income doesn't have the fastest dividend growth across any other stock or ETF in the entire stock market, about 10 years ago, Realty Income was paying around 18 cents per share per month, and as of now, it's paying around 26 cents per share per month. So like I said, for the more dividend-focused, income-focused investor that still wants some exposure to some growth and want to have exposure to some high-quality real estate, I think Realty Income at these levels is going to be a no-brainer, although it could still drop lower from here, of course. And speaking of dividends and dividend yield, Realty Income is offering a 6.15% dividend yield. Now, this is a dividend yield that we have not seen since 2020, considering Realty Income is now trading back to the same price that we saw during the 2020 crash. And then before then, Realty Income was at these levels back in 2015. Now, Realty Income does definitely have some significant headwinds, issues like fears with some of the clients that Realty Income has in the portfolio. And of course, longer sustained interest rates are definitely going to put more pressure on the REITs as a whole. But that being said, for investors that have a longer time horizon ahead of them and that favor cash flow on a monthly basis, Realty Income definitely could, without a doubt, be a good stock to at least have on your radar. So there we have it. Those are 3 different stocks, 3 different companies that as of right now are offering a significant amount of cash flow, considering most of their prices are being beat up. See, one of the best things about being a dividend growth investor is that when stocks go down and get more and more red, the amount of cash flow that you're going to be able to receive on an ongoing basis right from the start is going to be larger than say if the stock is up 20 or 30% from here. But what's funny is that the psychology of being an investor in the stock market, it always feels a little bit more scary buying into companies when they are nosediving, and it seems like they're going straight to zero. But that's of course why it's very important to always keep a necessary amount of cash balance on the side and to always keep your portfolio balanced to a risk tolerance that matches what you're looking for. Now, another obvious metric that's very important, especially when dividend investing, is to know if or if not the stock that you want to buy into has a safe or unsafe dividend. And according to simplysafedividends.com, all 3 of the stocks we went through in this video either have a safe or a very safe dividend. Public Storage, for example, is a 96 on the very safe score, which means the dividend is considered almost as safe as it gets. Now, if we were to look at Target's dividend safety, it's at a 90, which is also considerably safe, just about as safe as any dividend out there. Now, last but not least, Realty Income's safety score on the dividend safety is an 80, which makes it the lowest out of all 3 of the different stocks we went through in this video, but still Realty Income does have a relatively very safe dividend yield, which in my opinion could change if there was to be a massive issue ahead with the real estate that Realty Income owns. But as of right now, Realty Income, Target, and Public Storage all have considerably safe dividends, which is very important when it comes to investing into a single stock, because let's be real here, almost nothing is worse than owning a stock and having the dividend cut. And take that from someone like me. I've owned multiple different stocks over the last decade or so, and I've had multiple different stocks cut their dividends, and it is not a fun time. But now I want to hear from you guys down below. What are a few stocks that are offering an explosive amount of dividends, an explosive amount of cash flow as of right now due to them being beat up in price? Comment the tickers down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.